Hey, it's Nero here, and if you're watching this video, you're probably wondering, hey, look, am I looking to invest in the Melbourne market, or I've already got a property in the Melbourne market, what's the problem? All right, and I completely understand that. Look, over the last, I would say the last 2 years at least, I've seen a lot of Sydney investors look to invest in Melbourne. Why? Well, some good reasons initially, and they are number one, well, look, Sydney market's unaffordable, and I don't think it can rise much more. I'll go to Melbourne. Melbourne's cheaper. Okay? And that's true. Secondly, Melbourne's got a growing population. In fact, we still know that the majority of migrants who come to Australia settle in either Sydney or Melbourne, so Melbourne has a growing population. True as well. Number three, Melbourne has massive infrastructure spend to cope with the growing population as well, and obviously it's got a strong economy. So that's why I'm going to invest in Melbourne, especially because I can't afford Sydney or don't think Sydney's a great place to invest in anymore. Makes perfect sense. Except for one problem. Many people have forgotten that the Sydney and Melbourne markets move in parallel. So therefore, when the Sydney market rises, Melbourne rises. When Sydney goes flat or falls, Melbourne rather, goes flat and falls as well. So the problem is we're seeing now the Sydney market has come off its boil as of July last year, 2017, and a Melbourne market came off the boil in sort of November 2017. Yet I'm still seeing people going, look, no, I don't want to buy in Sydney. I can see the Sydney market going down. I'm going to go in to buy in Melbourne because I've got lots of friends and family who bought in Melbourne and made money. Probably. Okay? People who bought in Melbourne sort of 2012, 2013 have made some significant money. But the question to ask yourself is now the time to be investing. Look, the Melbourne market isn't a bad market, just like the Sydney market isn't a bad market. I think anyone tells you that is crazy. You've got a growing population, good economy and everything else. However, the question is now the time to be investing? You see, it's okay, for example, if you're in your maybe early 30s, you're looking at a 20-year time frame to look to create wealth. It doesn't really matter if you buy in Melbourne now, if the values decrease, as long as you can hold long enough, you're going to be fine. But the problem is, number one, do you have the cash flow resources to handle it and to hold on to properties in Melbourne for long enough until prices start to rise again? See, because one of the other big problems in Melbourne is that Melbourne has the lowest rental yields in the country, especially for all capital cities. Okay, and that's partly because, according to CoreLogic, the median income in Melbourne is actually not just lower than Sydney, but lower than Brisbane's as well. So because the median income is so much lower than median price point for property, you've got an issue where people's rental can't afford higher rents. And as an investor, if you're buying in a market where rents don't come even close to covering the mortgage, they don't right now, and interest rates are going to rise going forwards, you've got to ask yourself, do you have the cash flow resources to handle the fact that you've got to fund this mortgage, at least partially yourself, quite significantly for some time? The other thing is, if you're looking to create wealth over the next 10 years, maybe you're in your mid to late 40s or older, and you're looking to sort of create wealth the next 10 years so you have an opportunity to retire and set yourself up for retirement, you've got to ask yourself, should you be buying in a market that's looking to fall and go flat for a while? Or should you be buying in a rising market? I think that answer question is pretty obvious, right? But we forget these fundamentals. And my whole aim with this video and all my videos is to just, I guess, highlight some of the issues. Look, the Melbourne market's not a bad market. And look, if you bought earlier on, you would have done really, really well, just like people have in Sydney. But right now, I think those times have gone. And I think you really need to just be careful if you're going to buy in Melbourne as an investor. Are you making the right call from a cash flow perspective and from a capital growth perspective? And do you have the cash flow resources to hold on long enough until the Melbourne market comes back? Because it's not going to crash, despite what everyone tells you, but it's going to go, it'll decline for a bit. I mean, ANZ is expecting about a 10% drop in the Melbourne median price point over the next, I think, 18 months. And then I expect after, it'll probably go flat for quite some time before rising again. And what's going to make it rise is affordability. Now, as more people can start to afford prices in Melbourne, because right now they just can't. So that's what I'd be looking at to consider. Should you be buying in Melbourne, or should you be buying in other markets that are actually growing right now, that are far more affordable than the Melbourne market is right now, and see if that's an easier way for you to create wealth? I mean, I'm getting so many people who are contacting me or leaving comments on Facebook and saying, look, I've got this property in Melbourne, I bought it over the last 2 years, what do I do with it now? It's not growing. I can't see it growing anymore for quite some time. Yes, there's lots of infrastructure going in, but people can't afford it. So what do I do? Okay, and the answer to that question comes back to your goals and timeframes. But if you're looking to enter the Melbourne market, please be cautious. Please understand that if you're looking to create wealth over the next 5 to 10 years by investing in Melbourne, the odds of that are pretty low, only because, not because Melbourne's a bad market, not because the population isn't growing, none of that. It's purely because the price have risen so much over the last few years that now there's just taken a bit of a break, a bit of a breather, so that people can then sort of increase income the next few years so that affordability then comes back within control, and then you see prices rise again. When that's going to be, look, no one's got a crystal ball, so just understand if you're buying in Melbourne right now, I've said it before and I'll say it again, it's probably going to be a long period of financial pain for you as you don't see the capital gain that maybe you're expecting over the coming few years that people had over the last few years. Look, let me know what your thoughts are about investing in the Melbourne market right now. Leave me a comment below. I'd love to hear from you. Bye for now.